everybody. Adam Stern, CEO of Strata SFR here for our February monthly Touchbase. As always, I have waited till the end of the month just so that I have absolutely no time to make mistakes and redo. So I'm going to be as honest as possible and telling you what we're seeing here at Strata SFR in terms of activity. For those of you who have known us over the years, you know that we're essentially a boutique brokerage that deals in land and lots, build for rent and SFR portfolios. And we remain true to that strategy. So I just want to go over kind of my sentiment of the market right now and what we're seeing from the ground level, because it's certainly busier than we have been in a while. What's pretty clear to me is that there has been a massive amount of institutional and fund capital raised interested in gaining access to the U.S. housing market through build for rent and SFR portfolios, both new construction, build for rent, and existing SFR portfolios. And we've been fielding calls, a lot of which we were asking for. We went on a run lately where we called virtually all the major buyers in our network just trying to figure out what their 2025 investment strategy is, asking them what their demand is so we can go out there and source inventory for them. And by and large, it seems like there's no shortage of capital out there, but given the competition and given the stricter underwriting standards, everyone's interested in seeing deals both on the SFR portfolio side, the build for rent side. That's demand from institutional and SFR investors. They're asking for inventory with both hands, but still it is harder than it was to make deals pencil at a price where an SFR portfolio owner is happy with the price, or a builder is happy with the price that they're selling their homes as rental properties to investors. I am seeing an uptick in funds' ability to get slightly better on pricing. And that's causing us to get more looks at portfolios that we have had struggles with in the past. This is just mainly due to the massive amount of money, again, that came into the sector and the relatively limited amount of inventory being produced. There's only so many, medium-sized and large-scale SFR portfolios in existence that are not owned by other institutions, which is the sector we mainly focus on, to buy. So portfolios that range between, call it 10 units and 100 units are really our target wheelhouse. We're seeing a few deals at 300 units and above right now, and we're working our way to figuring out where pricing is on those. But high demands, we're finding inventory, and again, deals are slightly easier to make work in terms of the pricing that's being offered than it was maybe like 6 or 8 months ago. So I'm optimistic that as we see more demand from these investors and we're able to attract more portfolios and new construction tapes, we'll be able to make more deals happen. We're continuing to getting calls from, old clients of ours wanting to now sell their SFR portfolios, mainly because I think they realize things aren't really going to change a whole lot in the foreseeable future. Call it 12 to 24 months, unless interest rates change dramatically or unless the economy takes a shift. I think the housing market and housing prices are going to remain relatively stable. I think the return that most investors need to see is going to remain relatively the same. So waiting to get better pricing if you own an SFR portfolio or even new construction housing doesn't seem like the play. It seems like if you're a seller now, it's as good a time as any to sell, and maybe waiting 12 or 24 months might not make much of a difference. The SFR portfolio sales activity that we've done over the last 3 months, even, we've seen 4 different portfolios trade. Those portfolios were mainly anywhere between 1980 and 2010 builds. And we underwrote those at like a 5.75 cap. And I think that was toward the higher end of where we should have been underwriting them. They mostly all traded anywhere between a 6 and a 6.25% cap rate. For new construction, scatter site homes, I think we're underwriting those at a 5.75, and we're generally getting there. And stabilized SFR, or I should say B2R communities, those are trading at a lower cap rate, anywhere between a 5.25 and a 5.5. Although finding buyers for specific projects in specific markets is remaining challenging because a lot of funds are really acting more opportunistically than programmatically right now. It used to be we found an SFR development or rather a B2R development in a certain market. We'd have a large swath of buyers that were willing to make offers. Now it seems like everyone's models have gotten a bit nuanced, that everyone's looking for a little bit different thing. So, when we have a B2R deal to market, it's not like the wide swath of buyers that we once knew. It's like, hunting for a needle in a haystack. We really got to venture to understand who's active in what submarkets in the area that we're selling in and try to engage them in a meaningful way and try to get to a price that makes sense for, our builders to sell. Land and lots still remain kind of top of our kind of success pyramid. Builders are continually bringing us pre-developed lots or entitled lots. Others are bringing us fully developed lots. I think the builders that bring us entitled lots to sell that don't necessarily want to develop them are more risk adverse, or maybe don't have the financing to bring these developments through to finished lot stage. There's probably more of those right now than there are, at least what we're seeing, finished lot opportunities. Finished lot opportunities mainly come from builders that have the capability of both entitling land and developing the lots for sale to either build for rent buyers or other larger retail home buyers. I feel like, entitled lot sellers generally don't have the funds or the risk tolerance to take it through to completion. And finished lot sellers generally are a little bit wary about the current housing market and don't want to take on the risk of building the lots and then building the homes to make a profit. They'd rather just sell their finished lots because there's certainly a robust demand from home builders for any of the above. Home builders are buying finished lots, fully entitled lots. And again, it's pretty easy to nose out what builders want to buy what kind of lots, because you could just look on, the MLS, or you can look on online resources and find out, for this project, there's X number of builders already building there. And part of what we're doing right now is using some AI and some data intelligence to tell us, all right, builders aren't necessarily building in this area, but these builders are building in other areas, so this deal might be right for them. Our ethos has always been, find out what buyers want and then go find deals that make sense so we can show it to those buyers. We hate the concept of taking a listing and then marketing the listing. That was never really our way of doing things. And I think it's served us well as we're coming into a time when we got buyer demand coming from all sides, from builders wanting to buy lots, SFR investors wanting to buy SFR existing and scatter site new construction, and larger firms looking to buy, fully built out single site built for rent. Like, the demand is everywhere. It's undeniable. Bit frustrating when you find it and the deals don't pencil for a lot of those buyers across the landscape. But I guess that's why people hire brokers at the end of the day, because while they think it might be easy enough to just send out a few emails to get offers on an SFR portfolio, land and lots, or a build for rent project, it's really a process. And it's really a process of elimination. You need to cast a wide net. You need to know who you're sending it to. You need to really call and gauge interest, and then at the end of the process, ask for offers. Generally, it's taking us anywhere between 3 weeks and 2 months to go through that marketing process to actually get interest, let alone offers. But for the deals we have taken, on the SFR portfolio side, new construction tapes and build for rent communities, we've been able to actually get offers on generally every deal we've taken, mainly because we turn away more than we take because we don't like swinging at balls that we end up missing. So I'm optimistic about the balance of this year. I think that demand's going to remain high. Underwriting is going to remain challenging, but the opportunity to find an exit for people that have these kind of holdings is certainly there. So hopefully all this is interesting. I wrote up a pretty detailed description of the trends of the day in the email below. Also created some links to current deals we have, a bunch here in Charlotte, and a few deals elsewhere. Again, if you're a landowner, lot owner, build for rent builder, even retail builder, we'd love to talk to you. We're always looking for inventory to sell to our network of investors, and they are hungry. All right. Thanks a lot for listening. Appreciate it. See you later.